What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Thursday, May 9th. All right, guys, Nvidia stock here today down $1.42 a share. That's minus 0.16% in regular trading hours. It is down here a few points, about 5 points or so in the after hours, maybe 4 points or so. Listen, take that with a grain of salt. First of all, that's what I'll say. I'll preface what I'm about to say with that, because volume is I mean, if you're watching this on a phone, I understand that my videos are very high quality. But if you're watching this on a phone, you probably are having trouble even seeing that. You know, these stocks, guys, even like big blue chips, if you've ever messed around with a level 2 box in the after hours with real orders, it's kind of scary how easy these things can be moved in after hours when volume's really low and the spread is really thin. They can be moved just, I mean, especially like an institution, if they decide to spoof some orders after hours, these things can be moved a lot on not a lot of money. It's a little bit nerve-wracking, actually. So listen, either way, just take that with a grain of salt. But let's take a look here at Nvidia, and it's worth mentioning that we broke 900 to the downside in the after hours. We'll talk about all of it. Let's start with a volume profile analysis, pull out any bias out of the move that we can, kind of a look under the hood. We'll take a look at the psychological levels that, you know, the really everybody is going to be paying attention to. So by default, we need to as well. Self-fulfilling prophecy. And then we'll take a look at implied volatility, particularly very important if you're trading options. And then we'll finish out with the expected move and the directional bias heading into tomorrow coming from the chain. So let's get started here with that volume profile on the 5-minute. Hey, by the way, if you're new here, guys, Nvidia is a daily upload. I cover Nvidia every single day that the market's open. And my goal here is 10,000 subs, and I know we can hit it, but not without your help. So I greatly appreciate you subscribing to the channel, and I will keep the Nvidia videos coming daily. Now, if we take a look here, kind of peel back a layer of the onion at the volume profile, we can see that we held on to a little bit of extra volume compared to what would be normal off the open, but it was very touch and go, right? Like it was a couple of high volume bars, and then the red bar quickly faded, which is worth noting. Higher volume green bar, slight fade on the red bar, and then out of nowhere, the green bars just fade, right? So it looks like we're going to start to have some bullish bias that's really obvious, like higher volume green bars, lower volume red bars. And we had that for about the first 20, 25 minutes, and then it breaks. Okay, so take that as you will. As we move into the day, this here, especially these 3 bars, that is a bit of bearish bias because it's out of context how many consecutive red bars we have broken up by simply 1 green bar. These bars are a little higher volume than we expect during that day, during that part of the day. So that was a little bit of bearish bias, but listen, it is worth considering that the middle bar here, that was a battle bar, and the other 2 a little bit were as well. So what does that tell us? Those big wicks, right? That tells us that some of that volume is going to be buying volume as well, which pumps up the volume. So worth considering. That does take a little bit away from the bearish bias, okay? Now, really a pretty uneventful rest of the day. Into the close, we saw a very normal close, but then this big red bar, don't let that scare you. You'll notice here, again, wicks, or a wick on that bar. That's going to be a rebalancing bar immediately after the bell. So unless we see some kind of reason, like sustained volume after that rebalancing bar, which we of course didn't, I typically ignore this first bar, okay? Now, let's move on here. Take a look at the psychological self-fulfilling prophecy levels, starting with this very simple 30-minute chart. You guys remember yesterday we had kind of given up that 50 period. Today, we attempted a couple of times, really 4 times essentially, to reclaim that, failing each time, closing just below that level. Now, this did curl over and start curling back to the downside, which helped us out in getting there more quickly. But listen, bulls, here tomorrow, really simple. I want to see a high volume upside break through the 50 period, low volume retest, high volume bounce, pulling that back into an ascending position and treating it as support all in one kind of move. Now, bears, obviously, any retest of the 50 period, you want to see it reject on high volume, kind of like what we saw today, but just ideally a little bit cleaner. And that would set you guys up not only for potentially a downside break through 9, at least sustained, but also maybe a downside move toward that 200 period here on the 30-minute. Now, the 4-hour chart, you can see here a little bit less immediately in play, but if we look, right now we're about 2.5% away from the 200 period and about 3.25% away from the 50 period as that 50 period rises. So listen, bulls, I like that the 50 period's rising and getting closer because eventually it's going to cross over the 200 period. It might even occur tomorrow. The crossover itself means nothing to me. The golden cross, death cross thing, it's all overhyped. The reason I care at all is because the quicker moving average can get up underneath the stock faster, right? And that's a psychological support level. So if I can have a support level moving upside, if I'm a bull, that's a good thing. So really that's what I'm paying attention to. I want to see the 50 period rising as fast as possible. If I'm a bull, if I'm a bear, I'd prefer to see the 50 period slow down, maybe even ahead of the 200 period, and ideally getting back below both of those, but that would require about 3.5% of movement to the downside, whereas bulls, any downside test, if the 200 period is still the higher level, respect the 200 period as support, ideally. If the 50 period crosses over, that one takes over as the ideal area to treat as support here on the 4-hour. Okay, but a few percent away, so let's move on here to the daily. Now, the daily is the most important because it has the most eyeballs. So if we look at the daily, I mean, listen, guys, I don't think today is any secret. If you've watched any of these videos before, you probably already know what tomorrow is the battle of, right? Tomorrow's the battle of 900 bucks a share. It's really clear because again, this is the daily. It's not going to show after hours movement. We're currently just below 9 in the after hours. That may change by the time you watch this, but the truth is after hours is low volume, so take that with a grain of salt, but that doesn't change the fact that we closed only 4 points away. Now, listen, bulls, I don't really want to give away 900 bucks a share in a definitive fashion during the intraday session on high volume. I want to see 9 hold as tough of a support as possible, whereas bears, treating 9 as resistance is nothing new, but you want to return to that, right? Because when you're treating 9 as a resistance, you're back in the channel from 850 to 9, and that can set you guys up for a downside test of the 50-day, which is currently around 872.70. But, you know, bulls, we kind of just got out of this mess. We had to deal with the 50-day and 850, and then this channel, and then 9, and we got out of that mess, and I don't want to get back in that mess, at least from a bullish perspective. Because listen, to the upside from here, really there's nothing until all-time highs 1,000 bucks a share. Now, bears, one downside of breaking 9 and holding 9 as resistance is now you're in the mess. The 50-day, 850, a break there. Okay, well now you have a while, but then maybe 8 psychological level, 750. Whereas, you know, bulls, there's not really a ton to worry about until more like 1,000. Okay, now implied volatility compared to the last couple of months. Listen, it's still, if you compare to the last couple of months, it's in like the mid to high range. If you compare it to the last month or so, even month and a half, it's high. Okay, so if you've been holding contracts when you bought when IV was lower, you're holding a little bit of Vega pump right now. If you're looking to buy new contracts, understand that you are paying up front for a little bit of extra inflated Vega value, at least compared to your intended trade time frame, if your intended trade time frame is for a month and a half or less, let's say. All right, now expected move. Wednesdays are messy, okay, but we're going to do everything we absolutely can because that's kind of what trading is, right? So the next expiration we have is Friday, May 10th, and the expected move by Friday's close compared to today's close is plus or minus $26.67 per share. Now, what we can do to get tomorrow's expectation in terms of volatility, typically I divide that by the number of trading days left. So in this case it would be 2, and then I add back 50%. When we do that, it gives us a plus or minus expected move of $20 a share. On Wednesdays, and the reason I add back 50% first of all is to make up for the fact that just dividing by the number of trading days left, that assumes all red or all green days. So right now I'm adding back 50%, but on Wednesdays, you're only dealing with 2 factors, which is Thursday and Friday. So adding back 50 might be a little heavy. So I'm looking at tomorrow and looking at this as, okay, it seems to me that the market's expecting plus or minus a range of 15 to 20 bucks a share in terms of expected volatility, which is very important to understand if you're trading options. If you disagree with that fundamentally, that can be a good thing because that gives you perhaps a position to take, right? But you're probably wondering, well, what about directional bias? We can do that as well. Let's take a look at the volume, right? 933,000 total contracts traded today. Not the most we've seen on Nvidia, but fine. Calls, 579,000. And puts were 354,000. So a call side bias on the overall ratio here today. We can go one step further. This video is primarily geared toward tomorrow, right? So we can look at the 0 to 20 delta range, which gives us a much heavier concentration of the short-term speculators. 180,000 calls in that range and about 154,000 puts. So a bit of a call side bias there as well. Listen, guys, if your goal with this whole trading deal, whether you're just looking for a side hustle, part-time gig, or to go full-time, if your goal is to expedite this, that's what I created our private community for. You can take a look at that at the link in the pinned comment. You know, that link, that'll let you get grandfathered in at the current going rate, so that, you know, that goes for all 4 membership tiers. That way you'll be immune, if you join using that link, you'll be immune to future price raises as that price goes up over time. And hey, if you're getting value out of the daily NVIDIA uploads, all I ask is that you leave a like on the video and then get out of here and enjoy your day. Listen, I greatly appreciate it, and I'll see you in the next one.